Hey, Tyler, thanks again for coming on our show. We're really excited to have you here.
Hey guys, I'm excited to be here. I got to tell you, this is cool.
Well, Tyler, the first question that Adam and I want to know is why the emphasis on cash flows? Your podcast is called Cashflow Guys. I know that you talk about that a lot relentlessly, if you will, on your show. So I'm curious as to why there's an emphasis on that.
I'm going to make a long story short. When I when I was younger and a lot less mature mentally, I used to think that paying my taxes probably wasn't the best thing for me, right? So I did everything I could to avoid paying taxes, and to some degree that was not filing them, and that was a big mistake. So I've learned the power of the Internal Revenue Service, and I've also learned the impact that taxes have on my bottom line, right? When I worked for the federal government as an employee, I was taxed at the highest rate allowed by law. And although I made a huge income, well into the six-figure income working for the government, they took half of it in taxes. They put it in one pocket and take out of the other. The reason why my emphasis is so much on cash flow is because it is by far the lowest taxed way to earn money. There is no other way to earn money with a lower tax rate, provided you're paying your taxes like you're supposed to, than investing in real estate for cash flow. It's all about the passive income. It's not about the piles. When you earn piles of income, Uncle Sam has their hand out. That's a fact.
Yeah, that's awesome. And we did an episode on streams versus piles, so that that resonates really well with us. And the tax advantages that you mentioned, that's that's something that I think is one of the best reasons to invest in real estate personally. But it's interesting that it's so confusing. Like, I think tax is really confusing to your average person.
It is, but it starts with having the right people on your team to do your I don't get taxed to this day. We just finalized our taxes for 2018 with our CPA a couple weeks ago. I've got a bookkeeper, CFO, all that good stuff. I don't understand any of it. I know enough of it to know that when I have a question, I call an expert. That's what I do. And that's why I pay very little tax. I do pay tax. I pay some tax, but I believe that I'm taxed fairly. I know a lot of people probably won't tell you, won't even ever admit that, but it's true. Everybody needs to pay some tax. That's just life. Obviously, the government can't run without some sort of a tax base. But we're taking the confusion out of it. For me, is as simple as picking up the phone. I call my tax guy, Charles Shapiro. I get him on the phone. He solves the problems for me. He's the one. He worries for me. I don't have to worry about it.
Now, speaking of team members, how would you recommend somebody going out and finding the right team member?
Well, when it comes to taxation, first of all, I will not work with a CPA that does not own cash flow real estate, period. And I know that sounds harsh, and a lot of people have said, well, that's crazy. There's so many good CPAs out there and yada, yada. Well, I'm sure there is. But the bottom line is we are all human. And what I found is that you will research and study and become an expert in the things that impact you personally the most. So if you're a CPA and you don't own real estate, yes, you may dabble in understanding the piece of code, tax code, that talks about investment real estate and the tax advantages of it, but you're not going to be an expert in it. You're not going to specialize in it because, let's be honest, it doesn't necessarily apply to you personally. But the CPA, on the other hand, that does have cash flow real estate, well, it affects their own bottom line. And the reality of things is I'm going to do a better job studying something that deeply affects me than affects you, Kevin. I may study it enough to be able to help you to some degree, but I'm not going to be a true expert in it because it really has no impact on me. Does that make sense?
Yeah, absolutely.
That makes total sense. So, Tyler, Kevin and I love to explore topics that people may not have a lot of common knowledge around. We love to educate people, and we know you do too. Right. We also know that arbitrage is something that you have expertise in, and we believe that's something that not a lot of people understand. So I'd kind of like to start off by asking you what arbitrage is to help our listeners understand kind of what that is.
It's my favorite thing in the whole world. That's what it is. It's the fine art of buying low and selling high, right? Finding value in something and then essentially, for lack of a better term, exploiting that value, being able to get that value out into the marketplace in exchange for cash. An example of that is I know a lot about boats, right? I'm a licensed captain. I've spent many years on boats. I know that if I buy that a fridge or a stove for a refrigerator or for an RV costs far less than a stove for a boat. But I also know that there are lots of people out there that are looking for new stoves for their boats, right? And boat owners are willing to pay more than RV owners. So here's a little secret I learned. The RV ovens and the boat ovens are the exact same oven. The difference is that one says it's for an RV and one says it's for a boat. They are identical in every way, the same brand, same everything, but they sell for a third of the cost for an RV versus a boat. So a way for arbitrage for me, and I did this for several years, is buying these from the RV section on Craigslist and on eBay, buying them from somebody at a third of what retail would be, and then turning around and selling them or arbitraging them to somebody else for a higher amount. I was able to make 300 to 500% returns flipping stoves, ovens.
Wow, that's awesome, man.
Yeah. So you can see the benefits there. I mean, it's endless, and it's all cash, so that's lovely.
Yeah, that's a cool little business.
It is.
So with the arbitrage, you mentioned buying low and selling high. So I want to make an important distinction here that I've heard that term before, more in reference to market timing, which all three of us will agree that is a myth. And Warren Buffett himself will talk about that it's a myth.
That's right.
So I just want to make that clear that when you say buying low, selling high, he said, also followed up with looking for the value.
Yes, absolutely.
So how can an investor utilize arbitrage?
Well, for one, think about a lot of folks probably haven't heard of options, and that's something that doesn't really get talked about. It's not mainstream. It should be, but it's not. An option is the same thing. An option would be, let's say you find a piece of land, you find an owner that's having a hard time financially. They have a piece of vacant land sitting there doing nothing, and they're paying taxes on it. A way of arbitrage would be take a purchase option on it. And how that works basically is you would say, hey, Kevin, I would like to buy your lot for, let's say, $100,000 at some time in the next 5 years. And what I'm going to do is if you're agreeable, well, I would like to take back an option. I'll give you $1,000 option consideration. In the event I don't, that gives me first right of refusal, which means you can't sell it to anybody else. My option is assignable. So if I find somebody else like Adam per se that wants to buy a lot to make a shopping mall down the road, then I have the right to sell my option to Adam. So Adam can then step into my place in the deal and close with you. If I don't come through in that time frame, you get to keep the $1,000 as the option consideration. Does that make sense? And you say, well, yeah, I'm not doing anything in the meantime, and I don't foresee a problem paying the taxes for the next 12 months or however long the duration of the option is. But I want to see an end to this. So it gives you, the seller, benefit. And it obviously gives me the opportunity to arbitrage that lot. I contracted with you or have an option with you to buy it at one price, let's say $100,000, but then I know that Adam is a developer and his investors are willing to pay $400,000 for that lot. So I can then assign my option or sell my option to Adam, make myself $300,000-$400,000 profit, and we go on.
Now, does that option, which is fantastic, thank you for explaining that, does that apply to every asset in real estate? As a class, rather?
I believe so. I mean, there may be some state regulations from state to state that differ, and people may have different opinions based on your locality, but I've done business in several states across the country. I've used option contracts in several states. For me, I would say that before you ever enter into an option, sit down with a real estate attorney and have them help you draw up an option contract. So you understand what it says, you understand your rights, you understand the seller's rights in the thing. So everybody's on the same page. Those questions are going to be answered at that time. And that's a great way to get the answers to those questions.
Yeah, I love this. And Tyler, you do a really good job of making it sound very, very simple and understandable. I think one of the limiting factors for people to do things like this is just a lack of understanding. They don't even know this kind of thing is out there for them to try. What is a way someone who, even though you've explained it very well and they may have heard it and think, I understand this, but I wonder how I could do it. Like, how could I maybe do my first one? What are some things that they could do to maybe consider getting started with something like that?
I default to the good old library. When you have a concept, something that's new, Google gives a lot of different opinions, but they're generally not polished. They're kind of knee-jerk opinions. Go to the library, get a book, buy a book on Amazon about option contracts. Option contracts are essentially the same no matter where you are. In other words, it doesn't apply just to real estate. It applies to stocks and things like that. They're very common, although they're not talked about a lot, if that makes sense.
Mm-hmm.
So read it, grab some books, and you can go to the bestsellers on real estate options and you grab a book on it. It's not a very complex topic. And here's the thing you have to understand. If you keep it simple, the other party will understand it much easier. When you dive way into the weeds, you're going to know too much on the topic, and you're going to transfer that negative energy, I'll call it, onto the person that you're working with. So you go to the seller and give them a bunch of technobabble about options, you're going to scare them because they don't understand. And when people fear something, or when people don't understand something, fear sets in, and confusion, and confused mind always says no, correct?
That's
So instead,
brilliant.
Let's not deep dive on the topic. It really comes down to transparency. It's, hey, Mr. Seller, essentially what I'm doing is I'm betting you. I'm willing to put down $1,000 to bet you that I can buy this property in the next 6 months, 2 years, whatever it may be, for this price. And if I don't come through on that, you get to keep my earnest money or my option consideration. How's that sound? They're either going to say that sounds great or that sounds crazy. That's really as simple as and as complex as it needs to be, all in the same time. Because at the end of the day, when you're making an offer, guys, it comes down to, are you adding value to the seller or not? And if the answer is no, then you're wasting your time making the offer. And we do this with apartment buildings, we do this with land. Basically, Mr. Seller, Adam, I know you just bought a big apartment building here in Tampa. There's a likelihood that you may want to buy it at some point down the road. Let's say that your plan is to sell it in 5 years. I would like the first right of refusal to buy that property in 5 years, and I'm willing to put $50,000 up front, non-refundable as an option consideration, to guarantee my first position spot to buy that from you and your team when you're ready to liquidate that asset. How does that sound to you, Adam? You may
Sounds
say,
great.
yeah, maybe, if the price is right. And if the price isn't right, you'll say, well, I'm just going to wait and see what the market does. But
Right.
if you're representing investors, you're going to sit back and say, hey guys, we have the opportunity to guarantee to lock in our sales price 5 years from now today. This guy is going to give us $50 million for this building that we didn't pay $50 million for. And if he doesn't come through, we're going to keep his 100,000 or whatever it might wind up being. And you're in the driver's seat, so you get to dictate what that is. Is that a good deal? Could be. It could be a great deal. And it takes a lot of uncertainty out, right? It helps you develop a plan. So it could be a win-win across the board. But keep it stupid simple. That's my best advice.
That's great.
Keeping it simple, can be kind of difficult, especially with I think that it's inherently difficult to keep things simple as you're learning a lot. You just want to share it, and you're like, oh wait, I don't know if I want to say that. And speaking of that, negotiating, I think as a concept, when you boil it down, you're having a conversation, trying to just simply figure out how you can work together with somebody. But maybe it's my own limiting belief, but I find it to be such a difficult concept. So what are your tips on negotiating, Tyler?
Always be asking questions. Here's the thing. You're never going to go down in the weeds if you're always the one asking the questions. If you're the one that's pretending or actually the person that's always in the know, number one, you're going to shut off the other party, right? You're not going to give them the opportunity to really speak, and then you're not going to get anywhere we need to be. So if you always think to yourself during a negotiation that you're always asking questions, you're never making statements, because when you're asking questions, you're learning. And when you're making statements, you're teaching. It's not your job to teach a seller. It's your job to learn from the seller so you can discover their problems and then come up with a solution together that'll work for them. That's the bottom line. So for me, it always comes down to, people say I ask a lot of questions. Well, it's because I want to understand. And the more I understand the seller situation, the better I can make an offer that they will accept. I don't have to go round and round. We don't have to arm wrestle because I understand their problem. I understand that Adam has just closed on this deal, and in 5 years or whatever it may be, he's going to exit this thing because he's contractually obligated to his investors to do so. So that to Adam could be a problem, right? It could be identified as something he has to think about for the next 5 years. What's that exit look like? I can solve Adam's problem by saying, Adam, what if I could guarantee your exit today, 5 years from now? Adam's like, well, let's do more. Well, I think that the market's going to do great, and I'm willing to bet on it, and I'm willing to put my money where my mouth is. I'm going to give you that option. That's a negotiation right there. I've just negotiated with Adam by talking to him, discovering that he just bought a building, that his intent is to liquidate the asset in 5 years, let's say. And he works with a team of people. He's got other people that are making decisions along with him. So there's some things there that I can take and use to my advantage because I'm asking questions, right? I'm learning from Adam and what's going on. I can then apply that knowledge I learned by saying, Adam, not saying I could do this, but if I could, What if I could guarantee your exit in 5 years in writing in a contract? And if I didn't come through, you would get a sum of money from me. I'm going to give it to you now as an option consideration to show you how serious I am, or we'll put it in escrow or whatever. And you'll get that money guaranteed. How does that sound? His answer is probably going to be, let me go talk to my team and see what we come back with. And if the numbers are correct, we'll do a deal. It's that simple.
So Tyler, I love how effortless and comfortable you make negotiating. For me personally, I'm the opposite. I have a poor and kind of immature perspective on negotiation just because of my background. And
right.
I think a lot of people have that. You know, when they think negotiation, they tense up, they start sweating, they're thinking,
right.
oh, this is a win-lose, kind of a situation. And I would love for you to share with us some ways you think about it that help you be so comfortable, or, what could help someone like me who gets really anxious when they think about it. What might help us approach it a little better?
Well, from the start, don't ever believe that someone has to win. Okay. It's not a battle. It's not a competition. There's no trophy at the end, believe it or not. Nobody has to win. What two people have to do, or a small group has to do, is agree. They have to agree, and not agree to disagree. They have to agree. They have to, if the three of us are negotiating a deal, you two own a property and I'm trying to buy it, we have to agree that the offer I present and what you're going to get out of it makes sense. I also have to agree that my offer makes sense and that I can be profitable at the end. And if we can't do that, that's okay. Because I represent a team of investors too, and I can't put my team, my investors, into a place where they could potentially lose money. That would be irresponsible, wouldn't it, guys? Yes. Of course, you're shaking your heads, right? Because I'm shaking my head. That is, in fact, a negotiation. I just got you on board with the fact that you're going to sell me this property at a place where I can make money. And if I can't get there, we're not going to do business, will we?
No.
And then see, now you guys are shaking your head. So leads into the benefits of negotiation. One of the best things you got to learn about negotiation is always try to be face-to-face if possible. More importantly, if you can't do it, we're using a technology platform right now that allows us to do it. Even though I'm somewhere in the mountains of the Carolinas, you guys are back in Tampa, I was able to have that visual communication with you. I actually I shifted your mindset simply by shaking my head no and shaking my head yes. You guys started doing it. Adam's doing it right now. It works. And you can't do that when you're text messaging somebody, or you're on Facebook Messenger, or you're blindly sending an offer over via email. None of that transfers over. And you miss that very important human element. This conversation, this visual thing is the game changer. And that's what everybody seems to be missing these days. That's why folks get anxious about the negotiation. And here's a little secret for you. The seller or the other party is equally nervous as you are. They are just as nervous and scared as you are. Any sane person would be so. I am nervous before every negotiation. I don't know if some dude's going to lose his marbles and start screaming at me. If you spend a minute on Facebook, you can see people tend to react. Interestingly, these days, folks are super sensitive. So it's more so that feeling, Adam, that you're talking about, of people being nervous about it. I get it, and it's totally justified. However, you can melt a lot of that away simply by doing this face-to-face. Look him in the eye. And for me, that means looking at the green light on top of my monitor. That's really what I'm doing. I'm not even looking at you guys in the eye. You think I am. I'm looking at the green light. I'm not looking at Kevin's face. And Adam is actually below Kevin in the thing because there's three of us. So if you're scared, use Zoom. Because I'm looking you in the eye. I'm not. I'm looking at that little green dot on the top of my monitor.
Nice.
That is an awesome tip. I didn't think about that, but you're right. When I'm speaking into the camera, I'm not looking at your reaction. I'm looking into the camera, focused on that.
That's right.
When I think about negotiating, I don't like being told no. I think that is the biggest hang up, that anything that I say, that's an opportunity for the seller to say nope. And then I feel almost like I don't know what to do next. So how do you deal with the idea of rejection if in the process of negotiating?
I go for it right out of the gate, because here's the thing. When you're a kid and you stubbed you skinned your knee and your mom put a Band-Aid on it, the thing you feared most was not so much falling off your bike and hurting your knee. It was that Band-Aid coming off, right? But as you get older, you're like, yeah, whatever, you rip it off. It's no big deal. The more you get these things out of the way up front, get that negative energy out in the air and let it air out, the better things are going to be right out of the gate. So I will use what they call the pendulum theory. I will take a seller to the no right away. If you think about a pendulum swinging back and forth like this, when it goes to one extreme, where else can it go? The only place it can go is to the opposite side, right? So think about that in negotiations. I will ask questions that I know flat out the seller will say no to. I intentionally ask those questions to get that no out in the air, out in the open. Now we've talked about it, right? Psychologists use this technique when they're helping people through a problem. Like, let's say you had something in your childhood that was traumatic, like maybe you're riding your bike and you hit a rock and flipped over and smashed your face or something, right, and got hurt. That may keep you from riding a bike for the rest of your life. As an adult, what they find now is that if they take you back there, Kevin, remember when you were 3 and you had that bike? Tell me about that situation. You're going to go through and talk about what happened, right? And then you're going to come to your own realization by verbalizing what happened, that it was a bike and you were 3 and you shouldn't have probably been on a bike anyway when you were 3 going down a hill on a mountain. So it's really not your fault. It happened, but what you learn from that is stay off little tricycles that are going down mountains. And as long as you're not on a tricycle that's going over the side of a mountain, you're good. So if you're in Florida where, you know, the tallest hill is 3 feet tall, you're okay. You can ride your bike and you won't hurt yourself. Same thing with no. No right up front is like, okay, that was no fun, but it's out there. Now the seller's more comfortable saying no. And frankly, when you're asking questions, you're going to get no's. That's just part of the negotiation. So let them happen. Hey, you know, Mr. Seller, I bet there's no way possible. And I'll turn it into a joke because that makes it lighter. I bet there's no way possible you'd sell me this place for $1, would you? Because I only got with me is $1 right now. I don't actually have any money at all. And I'm broke and probably a little drunk right now. They're going to say, no, I'm not going to sell you to $1. Are you really drunk? No, I'm not really drunk. And you're going to laugh and it breaks the ice, right? So no has already come out. Your brain has identified no as something that's not uncomfortable anymore because he said no and you guys both laughed. You see how you've changed your view on no right out of the gate? So the next no is not going to be as painful because your brains are already identified that no doesn't have to be a negative thing. I'm an only child. I don't like no worse than anybody on the planet. I'm a spoiled capitalist pig. No, only child. No doesn't work for me. But I've learned to overcome that by turning it into a positive. Okay, no means that I'm asking questions, and every time I hear a no, I'm learning something. I'm learning more about the other party, and I'm learning better how to put this deal together or not put it together.
Wow, that's great. I mean, that really helped. I think that'll help a lot of our listeners think about it a bit differently. I know that certainly helps me. What are some ways someone who wants to practice this maybe with low stakes? You know, what are some ways somebody could try to start to build their negotiation skills?
For me, my best way, and I think we did this when you guys were with me, is we use a garage sale or any type of retail purchase scenario where you're dealing with somebody that's selling something where there's an emotional connection. And don't kid yourself to say that there's no emotion in real estate. And I hear people say this, it's multifamily. There's no emotion. It's all commercial. Always worried about it. It's all spreadsheets and numbers. Wrong answer.
Right. Not true.
It's just as emotional, if not more emotional, because you're dealing with bigger numbers, bigger risk, right? For everybody involved. Sellers underselling, maybe, whatever. So I would start with that arbitrage type thing. Go out and do some retail arbitrage and make some money while you're at it. Go to the garage sale and buy something at 25% of asking. And do so without making an offer. Try that. Have a good conversation with the seller of the product, like, I don't know, a bowling pin. So where'd that come from? Get the story behind it, right? Take them there. Why would you be selling such a great bowling pin? Don't say things like, what's the least you would take? Because that's the dumbest thing anybody could ever say.
Right.
I'm curious. You've got it priced at $1. What made you decide $1 worked? Why not $5 or $10 or, for that matter, 25 cents? What made you decide $1 made sense? And they'll say, I just want to get rid of it and whatever. It's like, well, not saying I could do this, but if I was in a position to take it home and not have my wife beat me over the head for bringing it home, would it make sense that we could maybe do business and I could buy this from you? I mean, a dollar's not going to work for me, but maybe a different price would. Did you have any thoughts on that? And see what they say. Look, man, give me a quarter and get out of my face. Great. Give them a quarter and off you go. So that's probably the best way, I think, to learn is to go out there and do it. And sometimes the sellers are going to say no, and then you're going to exercise that no muscle. And you're like, oh, okay, that's not so bad.
I love that. When you said exercise that no muscle, it's almost building that immunity to it, because that way when the stakes really matter, you're not afraid to get to that no and can swing the pendulum in the other direction.
Absolutely. One of probably the most powerful closes I use when I have my realtor hat on is I'll tell sellers, look, Mr. Seller, I'm going to sell this property. Whether you can decide which side of the table you want to sit on. I'll either be on the same side as you or the opposite side, but either way, I'm going to sell this property. It's going to happen. And they're like, what do you mean? I'm like, well, you can list it with me and I can take all the problem off you and handle it for you. And no, that's not going to be cheap because I don't discount my fees. I just don't do that because I'm the best in the business. That's bottom line. But understand that somebody, my team and I will sell this property. We will either bring the offer or we will sell it. We'll work with you as an agent. It's really up to you to decide which side of the table you want to be on, which you want to be on the opposite side of the table or the same side of the table. And I can tell you that 10 out of 10 times are like, yeah, you need to be on my side of the table. I don't want any part of that confidence on the other side of the table from me. Or arrogance, whatever you may call it. But it works.
So Tyler, Kevin and I spend a lot of time thinking about and talking about where we are in the market cycle right now. Sure, you've never had this question before, but we would love to get some of your thoughts on that. What markers may be indicating that a crash is coming or a correction or whatever we want to call this.
Well, first of all, I will answer the question, but let me say this. I don't really care what the market's doing because it doesn't have any impact on me. I buy when the numbers make sense, period. It doesn't matter whether it's Wednesday or Monday or the stock market's doing well or who the president is. I don't care. None of that matters to me. What matters is that I can make an offer that allows me and the team to make a solid return and gives the seller what they need. So therefore, markets mean nothing to me. Markets indicate emotion. And when emotion is involved, which we all know it is, that's when things don't work out for us. So with that said, I was in San Diego a few months ago for a marketing convention, and I got into an Uber. Jill and I got into an Uber, and the Uber driver was there educating me all about how I need to go out and buy real estate, especially apartment buildings, because apartment buildings is where it's at, and that I don't even need my own money. I can just go out and buy an apartment building easy peasy because he's doing it. And what could go wrong? He's in San Diego, by the way. He's buying an apartment building in San Diego. He's an Uber driver. I'm thinking, okay, no disrespect to Uber drivers. I mean,
right,
good for them for going out there and making money. But when the Uber driver is giving you investment advice, I think we have a problem. Another indicator is, hyperinflation is rampant. It's just, it's crazy out there. I don't get involved in the market discussions. I don't go to real estate meetings. I don't do a lot of that stuff. I focus on my whole world revolves around finding opportunity. And I do that by avoiding other people that are also looking for opportunity. I know that's contrary to what everybody thinks, but networking is great. But when I'm surrounded by other real estate investors, that doesn't work for me. I find people that have what I want. Therefore, I want apartment buildings. I want land. I want notes. I find people that have those things. If you don't have those things, then it's really not conducive to me to spend a lot of time with you. I laugh about realtors tend to hang out together. It's like, well, if one of you's got a house to sell, I don't think you're going to hire the other one. So why don't you guys go play out and I'll go outside and play. Go find sellers and buyers. You'll make money that way. It'll be fun. And what we do as investors is we go out and play with each other, and we sit in the room at the buffet and the Chinese buffet and talk about how great things are, how bad things are. We don't do anything about it, right? We'll complain that the market is whatever it is. It's up, it's down, it's in between, and therefore we can't make offers. We can't write offers that will upset the seller, all these different things. This is what's going on in the marketplace right now, is that people will buy anything that's for sale. It doesn't matter what it is. When you see people that are literally getting in fist fights over single family foreclosure flips, that's a good indication right there that there's a massive crash coming. When you've got people, and I just saw this morning on Facebook, lady says, I just got a $50,000 or $75,000 PayPal line of credit, and I want to know what to invest in. Woo. You borrowed 50 grand from PayPal, and I think their payback terms are weekly. I'm researching it for a podcast episode that's coming up. Their terms are weekly payback, and it's at like 39% interest.
Whoa.
What?
Yes. Oh, yes. And it's legal because of the weekly payback, apparently. Long story short, this poor girl is out there. She's already got she's already done the deal. So they've dumped the money in her checking account, because that's what they do. It's not a line of credit. They dump the money in your account. Now you got to pay it back.
Wow.
Problem is, if you just gave the money back on day one, you're still going to have to come out of pocket, right? That's dangerous. When everybody can borrow money, that's terrifying to me. Money is very easy to borrow, and it's very easy to spend money irresponsibly. And bottom line is, America as a country and Americans are both over leveraged. Okay, this is not a political statement. It doesn't matter what side of the aisle you're on. I could care less. You just focus on the national debt. Everybody's at fault for the national debt for the last, I don't know, how long has there been national debt? 100 years? We overspend. It's part of our culture. It's what we do. And that's what you're seeing right now, is that people are out there spending. I know a guy that spent $600,000 on a fourplex that rents for $750 a month. Fact, it's on the MLS in Tampa Bay. $600,000 for a non-waterfront fourplex.
Wow.
Yeah. I just listed a nineplex for $750,000. They can pull in like 15 grand a month. So, it's like, what are we doing?
So with that, how do you recommend investors prepare for the impending correction, or whatever we want to call it?
Well, number one, a lot of folks say this, but I'm going to say it anyway, because it needs to be drilled home. Stress test any deals you do. To me, that means don't take 5-year balloons. Adam just bought his building. He's going to exit in 5 years. But I guarantee you that the team, when they underwrote that deal, they stress tested it to say, hey, what if we can't exit this thing in 5 years? Is the sky going to fall? Are we going to be in receivership? Are we going to lose this asset? Is it going to go into foreclosure? You got to have to ask those tough questions, right? And you have to have the backup plan, because here's the thing. If things go as they're going, I'm here to tell you, you're not going to be able to refi anything in 5 years. You're going to have a very challenging time refining anything unless you've got really strong books and tons of equity. This is what happened last time. So we're not prophesying here. This is just history. We're just learning from history. It's what happened when the market crashed last time. Is the bank said, no, we're not going to loan money right now because it's kind of scary. Or we don't have the money to loan you. So that will be happening. So the folks that are out there doing these deals where they've got 5-year balloons and they're uncertain as to how much equity they're going to have down the road after or during a correction, they're going to be in deep trouble. These are the deals. These are the syndicators, quote unquote, that you're going to see hiding and changing their name on Facebook, because everybody's going to come looking for them because they can't exit these deals. So you have to stress test these deals. That's probably the most important thing. I tell people when they ask me all the time, is it more important to raise money or find deals? And my answer is always the same. It's yes. But you absolutely have to be doing both. But especially now is a great time to start raising capital and getting those capital commitments. Not to say that you can time the market, because as we talked about, you can't do that. It's just not possible. But understand that soon, very soon, there's going to be blood in the streets. There's going to be a lot of people exiting the market in a panic, because that's just human nature. It's what people do. How do people lose money in the stock market? The only way to lose money in the stock market is to sell when your stocks are down. You'd think that's pretty simple. Hey, my stock's down. Now's a great time to sell it. No, how about you wait a week until it goes back up and then sell it? But no, let's panic and sell now. So if you own real estate during the crash, when it happens, if you are leveraged responsibly, that means good long-term debt. If you're in the commercial sector, that's 15 or at least 15-year debt. If you can do it, 20, 25 is even better. If you're in the residential space, 4 units and below, you should be in 30-year residential financing. If you're not, you're in a very high-risk position. Now is a great time to re-leverage those smaller properties, to take that longer-term residential financing available from the banks. If you don't have the credit to do it, you can fix that. If you don't have the net worth to do that, you can fix that too by taking on a debt partner. All kinds of different ways you can structure those deals to insulate yourself from that. Because here's the reality: when things turn, everything that happens from people reacting, right? Or in some cases, overreacting. Don't be the person that overreacts. And if you're on a team, like Adam has a team of investors he works with, they know each other well by now. They've just done a deal together. How they act together as a team will dictate how their assets flow through a crash. Because here's the reality. People still need a place to live. People are still going to live in Adam's apartments. And even if he does when he does his value add or whatever he's going to do with that place, and Adam, please change the color.
Yeah, that is happening immediately.
Great building, needs a paint job. When he goes to exit that property, when things go haywire, it'll be okay, because here's the deal. They bought it as a cash flow instrument. It'll still cash flow. So everybody continues to make money, even though the market crashes, because people still need a place to live. You know, if you're a guy if you're invested in a business that sells widgets, and those widgets are determined to cause cancer, well, then you got a big problem. But that's not the case with housing, because people are always going to need a place to live. And provided that you've effectively maintained a property, probably the most important thing you can do is to take good care of your properties, maintain them effectively, so that during a crash, you can continue to be in a value providing situation. When you're providing value, the tenants are going to see that. And people aren't stupid. They look around. They look at the house next door where the awning's falling off, or the apartment building next door where the dumpster's overfilling. That landlord is doing a terrible job of maintaining that property. You, on the other hand, are doing a great job, because your place is all dialed in. You've got it painted up nice. The dumpsters are empty. Everything's clean and where it should be. People are going to stay there. And people are willing, and no matter what the market cycle does, people are willing to pay for a quality product. That's a fact. I don't care if you have an A-class or a D-class building. Doesn't matter. As long as you are better than the people that are surrounding you, you will always be full. That's a fact.
Yeah, that's brilliant. There were so many nuggets in there. It's hard to count them all. That's amazing. Thanks, Tyler.
No
so we have a lot of people who listen to the show who work W-2 jobs or 1099s, day jobs, basically. They enjoy their job, but they might have an interest in investing in real estate. What advice would you give someone who enjoys their W-2 job but wants to invest in real estate?
I would say start yesterday. The good news is that you're hopefully you're savvy enough to keep your job, regardless of how well you do in real estate. I mean, the biggest mistake I see people make is they get into real estate, they get the bug, and then they quit their jobs prematurely. They put themselves into a financial pickle, and then they try to use real estate as the vehicle to solve their situation they got into, when it's actually the situation that got them into the problem in the first place. So if you have a job and you enjoy it, great, keep it. Don't be in a huge rush, because let's be honest, you have a paycheck. So you don't have to get 1,000 doors in the first week, right? And frankly, it doesn't matter how many doors you have. It's how profitable you are on those, right? People ask a lot how many doors I have and whatnot. And at the end of the day, it's like, let's talk about 40 grand a month, because that makes more sense, doesn't it? The bottom line is I can outspend most people, because I make more cash flow than most people. So when you have a job, think of how that's magnified. Like, for example, I know, Adam, you love what you do for a living. You love your job, and that's great. And you can continue to do that. How much more would you love your job when you weren't there for the paycheck anymore? Right? It's going to make that situation even better. You can supercharge your retirement. You can take that W-2 income. You can roll that you can max out your IRA, reduce your tax obligation. You can maybe switch over to a Roth, and let that grow, so that retirement for you can be a lot sweeter. Because let's be honest, when you get in your 50s, you might think, I love the job, it's all cool, but I just want to go travel and go to Tahiti with my wife because the kids are out of the house and that type of thing. Things are going to change. So for you, those people that have that W-2, go ahead and get started, but take the time to educate yourself, right? Don't be in a incredible rush to have to keep up with the next guy or girl, that's investing in real estate. Understand that most folks that are invested in real estate are really broke. That's the reality of it. There's a lot of folks out there that pretend to be rich and they're not. Be smart, keep that job, but more importantly, start building those IRAs and start building up that insulation, because your job could go away. The thing about loving the job, that's all fine and dandy, but let's be honest, companies fail. That just is part of life. Some of the biggest companies out there fail, Lehman Brothers, places like that. Adam, your company, I just saw the paper is going through some changes. You're expanding. That's awesome. That does not mean your company is bulletproof. it means that change is coming, and sometimes change can work against us. So to further that thought, when you're a real estate investor, and now Adam, you've got passive income coming in, you have other investment properties and whatnot. If something happened, God forbid, to your job, you can still provide for your family. And that's the most important thing. And you're continuing to build your portfolio till it outpaces your paycheck, so that even if the paycheck goes away, you're not going to skip a beat. Nothing's going to happen for you, which is a beautiful thing.
That's great. Yeah.
Well, Tyler, that is the goal that Adam and I are trying to achieve, is that financial freedom, which is what you taught us and which is what we believe in, which is what we're trying to educate our listeners on doing, because we're so hell-bent on doing it ourselves.
Right.
With that, you and Jill are an example of financial freedom as you're traveling the U.S. in an awesome RV. And I know that you love your tech, and we love to ask this question. So what is your favorite piece of tech that you just had to bring on the RV with you?
That's a tough one, because I like it all. I would say, so I gotta say personally and professionally, I can't do just one. I gotta do two. So I would say personally, my Canon 80D camera. I love my cameras. I love photography and video work and stuff like that. So that's a play toy. We have a YouTube channel now to document our travels, the Cashflow Roadshow, and that's my favorite piece of tech for that. My work, quote unquote, work for the podcast is I got to say, my Rodecaster Pro. And no, I'm not. This is not sponsored. Rodecaster Pro is like a all-in-one podcast studio. It's awesome. I think my sound quality is better now than it was when I was in my fancy studio with big mixer boards and compressor limiter gates. They've put it all in this tiny little package that sits right here next to me in the RV, and it's awesome. So absolutely my favorite piece of tech.
Wow, that's awesome, man. And I think somebody else may have mentioned that Canon 80D before. I mean, people love that.
Yeah, it's an awesome camera. But here's the thing, none of that would work, I got to say, if it wasn't for my solar system. I am off the grid, which is a beautiful thing. So no footprint for me.
That's awesome. Well, Tyler, this was amazing. You have added incredible value to our listeners. So thanks once again so much for coming on the show.
Thanks for having me, guys. I appreciate it.
So Tyler, where can people find out more about you?
Best way is cashflowguys.com is my website. That'll link you over to my YouTube channel, the podcast, Cashflow Guys podcast. And of course, as I said a minute ago, the Cashflow Roadshow is where you can watch me goof off, do stupid things, run things over with the RV, all that good stuff. So you can go to Cashflow Roadshow and kind of follow our travels.
Awesome. Thank you so much, Tyler. We really appreciate you being on the show today.
Thanks, guys.